Hello, everyone, and welcome to Short Talk. My name is Oksana Lasevskaya. I'm a partner at SL Partners and the chairman of ACCA Russian Network Panel. We are launching conversation series on impact of the COVID crisis on business from the investment perspective. Today, we'll be focusing on environmental, social, and governance factors, or so-called ESG. In ACCA's Social and Environmental Value Creation Report, ACCA forges the path and calls for collective action by business, finance professionals, and society for social and environmental value creation. Needless to say that pandemic prompted severe market crash in March this year. But for investors who focus on ESG issues, there was some comfort in the resilience of high-rated ESG funds. I'm delighted to welcome Evgenia Sokolova as our speaker today. Evgenia has over 10 years of finance experience as a vice president at a global investment firm, JPMorgan. Evgenia has since founded her own company, Aktivera. Evgenia's company implements projects in impact investing worldwide, and more recently has focused on the broader ESG advisory. Evgenia, welcome. And let's kick off with the first question. So what is ESG investing? It's over to you now.
Thank you, Oksana, and it's my pleasure to be here with you. Thank you for inviting me and to share what we've seen over the past 9 months. To answer your question, ESG stands for environmental, social, and governance factors, as you mentioned earlier, that are incorporated into the traditional financial analysis of a company to measure its sustainability. Each factor is measured separately and then embedded into the final decision-making of investing into equity or debt of the company. You'll hear other terms being thrown around, such as sustainable investing, socially responsible investing, mission-related investing, and there's also a subset of this umbrella that's called impact investing, which space we've been operating over the last 7 years. Hope that answers your question very briefly.
Yeah, excellent answer. And for me, it's a new term that has been in use for some time already right now, and just thanks to, in a way, thanks to COVID, it has become more important and has been quite well spoken actually around. So why do we focus on ESG now? Why is it so important? Is it just because of COVID, or it's the whole overall perception that changes the attitude towards social issues?
Mm-hmm. Yeah, I think it's very much both. In terms of numbers, we've definitely seen outperformance of ESG funds versus the broader market. To give you an order of magnitude, for example, the broader fund universe saw an outflow of $385 billion in the first quarter of this year. This compares to an inflow of ESG funds of $45 billion in the same period, and that's according to Morningstar statistics. We've seen the similar trend continue into the second quarter, and ESG funds attracted globally a net inflow of over $70 billion between April and June. And that's 60% more new money that's coming into the ESG space, more than the traditional equity funds over that period. Now, if you look over the debt side of the equation in the ESG market, again, it's been quite a significant, notable outperformance. We've seen especially the green bonds have been by far the fastest growing part of the market, with issuance close to 350 billion in 2020. And that's up close to 40% over 2019. I think looking at different parameters, this trend is likely to continue. Just to cite one final point on this, we've seen JPMorgan, my ex-employer, publish a survey asking this question to a universe of close to 13 trillion of assets under management to fund managers. And over 55% of respondents mentioned that they think that pandemic is likely or very likely to positively impact ESG space. So I think performance, both in terms of sheer volume and percentage terms, has brought ESG back into light.
Wow, it sounds like a rapidly growing market and seems to be attracts a lot of attention, and I'm sure that is going to be growing faster even further on. So my next question is going to be, so how has COVID impacted ESG investing, and what is driving ESG market outperformance in light of COVID?
Mm-hmm. Yeah, great question. I think if we look at the market fundamentals, there's kind of three very strong parties. One of them, investors, are definitely looking for companies with sustainable business models that can make it through the crisis. And we've known in the past that strong ESG practices are very much aligned with long-term planning, business continuity practices, operational preparedness. And we've seen a number of companies shine through the crisis. We've seen a lot of differentiation in things like healthcare packages, in things like employee benefits, and in things like relationship with the suppliers and the customers. So investors are very much looking at how companies treat their employees, customers, and suppliers, which in turn creates a reputation and loyalty over the long term. And so that is definitely driving the ESG market. Secondly, I would say the consumers. You see that the consumption patterns are very much shifting as a result of the pandemic. Again, another survey indicated that over 60% of customers said that they will be willing to pay more for products from companies that have decent values and that are reputable brands. Millennials are again another factor there, and they have over 70% indicated that they will work for a company with strong commitment to its community. And so again, we've seen a number of positive and negative examples that are affecting valuation of the companies. Just to cite at a macro level, there's been utilities that have given more generous terms to its most vulnerable customers, and we've seen their share price affected. On the downside, we've also seen worker layoff policies across retail chains, again, demonstrating kind of the management thinking, good management thinking or lack thereof. You see on both sides of the equation examples like Boo retailer, Zara, Amazon, all having different practices and approaches to their employee retention and benefit schemes. And I would say the final group that's been quite influential in this as well is the governments in terms of new bond issuance and in terms of rescue packages, as the government's becoming sort of the lender of first resort now, as we've seen, for instance, with Air France deal, the rescue package dictates that Air France cuts its emissions significantly, and as part of the package, they've been asked to stop their short-term flights until they get to that target. Finally, the Green Deal, as you've seen coming through as part of the European government, stipulates net zero carbon economy by 2050, and as well as the close to 3 trillion ECB's asset repurchase program also explores opportunities to fight climate change, introduces the new taxonomy for green financial products. So there's a lot of things that our governments are doing with large volumes that is pushing the ESG market into the positive direction as well.
It's fantastic. Honestly, for myself, it's very interesting to hear about the processes that are going on in the investment market, how things are changing and how people actually change their attitude towards social issues, and especially from the government perspective as well. So just looking a bit further on post-pandemic, how do you think that COVID will impact or influence the ESG space after pandemic, when everything will settle down and we would start up living exactly we would just come back to normal? I don't know whether it's going to be new normal or just normal. What is your view on that?
I would say probably in three ways, again, broadly speaking. We will definitely refocus on the S. S has been touted as the kind of neglected child of the ESG. And so it's definitely making a strong comeback or strong focus with a lot of the policies that we mentioned, anything from childcare, employee benefits, executive pay, healthcare. So that's and I think we will look under Microsoft policies that the companies have in place, and that will in fact impact their valuation. I think secondly, what COVID has brought to light is the materiality of ESG. Again, for people new to ESG space, some of these factors might be seeming a bit, sort of nebulous. And we've seen specific numbers coming out of the companies that actually puts the materiality of ESG back into, demonstrates it again in financial valuation of companies. And finally, I would say, and very importantly, COVID post-pandemic will highlight the importance of long-term thinking. Again, that's what's been kind of the crux of ESG space, being disaster preparedness, thinking long-term. And again, we've seen differentiation between the companies that, for instance, had some disaster planning practices and policies in place, including financial cash stashed away to pay for their customers, to pay for their employees, to keep them on the payroll. So it's really highlighted this last point that will, I think, change the way companies approach ESG and planning that's associated with it.
Evgenia, thank you very much for your time. It's been very interesting to listen and your ideas and your view on the topic, especially that you're such a brilliant expert on this topic. We will continue our conversation next week, hopefully. And thank you very much one more time. Keep safe and stay safe. And yeah, and thank you all for listening our short talk, and goodbye.